Good morning, my dearest little goblin professor captains. My name is Adam Livingston, and I am your #1 source for Bitcoin and Bitcoin Treasury company analysis. Let me begin with a simple question. How do you value a company that prints shares like toilet paper, uses the proceeds to buy an asset that can't be printed, and somehow ends up with more value per share after dilution? Sounds impossible, right? That's because you're thinking in GAAP, not God mode. See, in normal finance, dilution is a death sentence. In Metaplanet's finance, it's a time machine. You're not buying equity, you're leasing the future at a discount. And the craziest part, the market sees a 3x mNAV or above and says overvalued. Meanwhile, that multiple is compressing your premium itself faster than the CIA can fix a Latin American election. This is a recursive Japanese Bitcoin engine powered by disbelief, funded by yen and governed by quantum mechanics. And today we're going to show you why Metaplanet isn't just undervalued, it's weaponized mispricing. Just a heads up, I am putting the Bitcoin Wizards private Discord server up very shortly. Literally should be up and running later today. Formal announcements coming, but right now you can get access if you become a paid channel member with the link in the description. If you want access to the Wizards Council where you get more direct access to me, including a more exclusive voice chat channel, feel free to sign up. If not, no pressure at all. I just need a spot to hang out and chill while doing my analysis. I don't have a home base. I'm sick of Telegram, WhatsApp, Discord, XDMs, email, Signal, iMessage. Enough. The Bitcoin Wizards Tower is my new home, and I hope to see you all there. Now, I will be starting this presentation by going over a few X posts I have made over the past few days, as I believe they provide a good overview of how I view the current Metaplanet's valuation. Remember, this is not financial advice, this is financial entertainment. Metaplanet has now hit around a 3x mNAV not once, not twice, but 3 times. And every time it happens, something insane follows. On May 11th, 2024, the mNAV was about a 3.1 with the stock price at 24 cents. On April 25th, 2025, the mNAV was again around a 3.1x with the stock price at $3.09. And on July 16th, 2025, the mNAV is at around a 3.2x with the stock price at an 8.97. There is a clear historical trend of breaking out to higher valuation multiples. Will it continue to do so? Maybe. I view mNAV as valuation. The market is valuing it at a multiple of its net assets. If this doesn't melt your frontal cortex, let me spell it out. Every time Metaplanet hits around a 3x mNAV, it doesn't flatline, it detonates. This isn't resistance, it's ritual. The 3x level is not where momentum dies. It's where the recursive flywheel lights the hell up and starts converting fiat into hypersound BTC per share. It's not just a breakout pattern, it's a fractal time bomb. And every turn is faster than the last. When Metaplanet trades at a 3x mNAV, it prints shares like a Japanese central bank anime villain, scoops Bitcoin and shortens your NAV convergence window down to weeks. So yeah, maybe it goes higher, maybe it doesn't, but if history rhymes again, and this is the third act in the trilogy, you're watching a recursive supernova tear through traditional capital theory. Don't call it a premium, call it a time distortion field. Let's move on. You ever see time fold in on itself? Watch closely. This slide shows what I call the months to cover collapse, and yes, that's exactly what it sounds like. The time it takes for your so-called premium to be neutralized by Bitcoin accumulation is imploding like a dying star. Now, I'm just going to read this. Another way to conceptualize the value proposition of Metaplanet right now, the months/days to cover is collapsing. Due to premium compression, there is a lot less time for your premium to be covered with future BTC accumulation. Of course, this is highly dependent on the level of accumulation they can achieve with their current valuation multiple. You can calculate a historical accumulation rate for a variety of different time periods to get an idea of how quickly this premium can be covered. Using a 3-month trailing period of BTC accumulation, which includes a prior period of around 3x mNAV equity issuance, the time to cover your premium if you buy today is only 9 months. Now, the reason why this is so low is because we just saw periods of equity issuance at a higher valuation. But here's the thing, if you simply do the math by doubling a hypothetical valuation, the premium is still going to be burned off in a matter of weeks or months, not years. That's not dilution, that's NAV arbitrage with a speedrun timer. You're not overpaying at a 3x mNAV, you're just prepaying for future Bitcoin per share, and the company is handing it to you almost instantly. Let's look at the wider historical time horizons to get a broader view of what our potential time to cover premium could be. On a prior 6 months of data, it tells us that we're going to have a 1.4 months to cover the premium. And if we look at the prior year of BTC accumulation, you're getting a 2.5 months to cover. If they keep stacking at this velocity, the entire premium you paid gets vaporized in weeks or months. You know what that means? It means you bought into a premium and got spot BTC exposure plus NAV convergence plus recursive upside in almost no time at all. Meanwhile, the normies are still crying about dilution, not realizing that dilution is literally the mechanism by which we print more BTC per share for ourselves. And this is why this trade shakes out the people with high time preference and low time horizons. They literally can't see how their Bitcoin per share can increase over a period of 3 to 6 months. So when people ask, aren't you worried it's overvalued? No, I'm worried you're not thinking fast enough. Let's go deeper. The price fell, the engine got faster, and everyone ran. Let's talk about how dumb this market is. Between July 1st and July 15th, Metaplanet's premium dropped from 517% to 297%. Naturally, everyone panicked. They saw the price drop and thought the game was over, but what they missed is that while they were busy checking Yahoo Finance, the premium compression velocity doubled. PCV went from 1.89 to 3.57. That's not bearish, that's black hole level bullish. Because now you're paying way less for twice the BTC acceleration. It's like if Tesla cut the price of the Roadster in half and added a rocket engine out the back. The ticket got cheaper, the roller coaster got faster, and everyone ran the other direction. Here's what they don't understand. Premium is a static metric. It shows you what you're paying, not what you're getting. PCV is my best attempt at giving you a current BTC accumulation engine speed, taking into account the previous 3 months of accumulation data, which, as you can see, around 3 months ago, we were also trading at around a 3x mNAV. At a 3.57 PCV, you're paying way less for twice the BTC acceleration. So if you're selling this because it looks expensive, cool, I'll buy your shares, see you in December. I'll be holding a synthetic black hole made of Bitcoin and Japanese equity mispricing. All right, now let's throw your CFA textbooks in the trash and talk about something Wall Street still hasn't figured out yet. Metaplanet doesn't reprice equity, it reprices time. Because when you understand PCV, you realize the market isn't buying expensive Bitcoin exposure. It's buying temporal compression, time value arbitrage in the form of recursive BTC per share acceleration. Look at the equation. The PCV is the mNAV minus 1 divided by the months to cover. Simple formula, devastating implications. Let's walk through the data. July 1st, the mNAV was a 6.17. The mNAV months to cover, depending on what your rate of accumulation you're calculating at, was a 2.7, and the PCV was a 1.9. Now, on July 15th, the mNAV was at a 3.97. It's slightly down now. The MMC, a 0.8, and then a PCV of 3.57, which means at a 3.57 PCV, one full NAV turn compresses every 22 days. So the premium is burned off, in almost no time at all. That's a lower valuation multiple, but a way shorter months to cover, so what happens? Velocity gain. The premium compression engine has now stepped on the gas, and here's the punchline. Paying 3x NAV today is like buying spot Bitcoin weeks into the future, but getting the exposure today. You're not just front-running the NAV, you're front-running time itself. PCV isn't about what you pay, it's about how fast your capital converts into BTC per share gravity. That's why Metaplanet doesn't just trade differently, it exists in a different temporal dimension. Let's move on before your finance professor comes back from the dead. Time to unveil my favorite little ratio, the compression efficiency index. The formula is barbarically simple. It is the PCV divided by the coupon rate. Translation, how many units of premium compression do you get for every percentage point of interest you pay on your capital? Now let's see whose machine is actually worth turning on, or whose stock to buy. This, better than anything in my opinion, demonstrates why TradFi is getting their brains broken. Metaplanet's CEI is literally undefined. Mathematically infinite because its financing cost rounds to zero. Think about that. Strategy pays 0.4% to crawl at a 0.04 CEI. Meanwhile, Metaplanet is channeling divine leverage. It compresses premium at full throttle and the meter never starts. In physics, dividing by zero blows up the universe. In finance, it just prints you more Bitcoin per share than the model can even handle. This is why traditional analysts short-circuit. Their spreadsheets were never built to handle an infinite. 0% interest on debt is powerful, folks. Bottom line, Metaplanet turns equity premium into BTC at a cost the market literally can't price because the price is nil. That's not cheap capital, it's free kinetic energy for a black hole. This would be a great way to evaluate the efficiency of the cost of capital of other Bitcoin treasury companies. Let's see how deep the singularity goes on the next slide. You can look at our scenario torque here. Assume BTC goes from 100 to 200K and share issuance pace remains constant. As you can see throughout, the higher BTC squeezes the months to cover faster than it inflates the mNAV. So PCV accelerates into a bull market. The Bank of Japan's zero interest rate policy is still flatter than a Tokyo rooftop. Metaplanet with Evo issues stock at the market, pays 0% to do it, and instantly drop kicks that fiat into spot BTC. That's monetary alchemy with a cost basis rounded to zero. Horseman number 2 is the cannibal yen. Every time USD JPY drifts higher, Metaplanet's NAV in dollars gets a free steroid injection. Think of it as a built-in FX leverage button. Press start, watch the NAV balloon, and sip your tea. Horseman number 3, the ETF flow vacuum. Japan's shiny new yen-denominated Bitcoin ETFs are on the way, folks. They'll keep sopping up coins from the global float. Liquidity price pressure builds, and Metaplanet is there with a giant industrial Hoover vacuum soaking up the slack BTC before your Bloomberg terminal even refreshes. Horseman number 4 is the 210K BTC warrant war chest. Metaplanet already has the green light to raise enough for 200K BTC. Today's float, that's phase 1 in a multi-season anime arc. Do not judge Goku's ultimate power on the Red Ribbon Army arc. At least wait until Super Saiyan 3. Picture a recursive capital mega cycle where every warrant exercise feeds the balance sheet feeds the mNAV, and mNAV feeds the next capital raise. By the time Wall Street notices you're holding shares in a Bitcoin singularity, do not sell this thing too early. What are you, stupid? Bottom line, zero cost of capital, ETF-driven supply vacuum. They're coming to America, and a pre-authorized war chest the size of a small nation state. If the catalyst stack doesn't scare your valuation model, check its pulse. It might be dead. Capital flows intentionally when holders understand the flywheel. Issuance pace accelerates, MMC collapses, and PCV spikes. Premium is the price you pay to borrow time from the future. Velocity is the rate at which you repay that debt. At greater than a 3x mNAV, you're paying forward future BTC per share. Waiting with the stock is not passive, it's the act of letting time arbitrage do its work. The more enlightened the investor base, the shorter the time debt. For the love of God, what am I saying? If you are smart enough to feed the beast, you get rewarded faster. In other words, the stupid people are dragging us down, but you know what? It's fine because Bitcoin is inevitable. So if you're buying at a 3x, 4x, 5x, 6x mNAV, you just pre-purchased BTC accumulation acceleration in advance. Hold, let the dilution cycle wake up the premium neutral and BTC rich. The bottom line, below a 3x, the flywheel spins, but you're on training wheels. Between 3 to 5x, optimal torque, premium pays for itself in weeks. Anything greater than 6x, if the crowd is smart, dilution speed is a feature, not a bug. Therefore, a high multiple does not equal overvaluation. It is is temporal prepayment for compounded BTC per share. Greatness is not found in low prices, but in fast convergences. We've seen that time and time again ever since Metaplanet came to the scene. Do I know what the mNAV will be next month? Nope. 2 months from now? Nope. 6 months from now? Nope. But I have seen an investor base smart enough to pay to be the flywheel. And I have faith that this stock will be able to increase my Bitcoin per share every 60 to 90 days. Zoom out, have faith, have fun, and don't get too emotional whining in the Metaplanet dojo. Premium isn't a cost, it's a time loan. The velocity is tougher at a 6x, sure, if your investor base is a pack of room temperature IQ mouth breathers who sell at the first red candle. But Metaplanet shareholders, they're degenerates with calculus tattoos and time horizon nihilism. They want the dilution. They understand that every share printed is another shovel of fiat flung into the furnace and reforged as Bitcoin NAV. The population with the highest IQ and the lowest time preference is Japan. The big multiple does not equal overvaluation. The big multiple is prepaying your ticket to the future. Wait out the months to cover cycle, collect outsized BTC per share, and let the normies debate the PE ratios while you're measuring returns in chronological compression. Cheapness is for coupons, convergence is for kings. Anything above a 3x mNAV, you're not late, you're early to the next epoch. Buying temporal arbitrage at wholesale and letting dilution pull tomorrow's Bitcoin into today's cap table. Strap in, the premium isn't a penalty, it's the portal fee for skipping ahead in line. My name is Adam Livingston, and I am the Bitcoin Wizard. If you enjoyed this content, please like this video, subscribe to the channel, and leave a comment on what you'd like me to comment on next. Have a terrific day. Class dismissed.